Should be good to go, guys. I lost power this morning, so I had to reset everything. But I think we're in business here. So good morning, guys. Happy Monday. And let's see, today is March 28th. So we'll be jumping into April here this coming Friday. But quick look here, guys, at the futures. Not too much to write home about. The S&P is flat. The QQQ, everybody's favorite. The Qs are flat. The Russell 2000 is down. We'll call it flat. Bitcoin futures, though, and I don't think we've ever talked about Bitcoin really here on the channel at all. You got the Bitcoin futures up about 6%. So while I've never traded Bitcoin itself, with a decent pop here, keep an eye on the names like a coin. Some of these quote unquote Bitcoin crypto stocks. Not a good trend, not a good structure in Coinbase. I think another one is Riot. Again, not the best trend. And then I think you have Mara, M-A-R-A. Not really my setup. So figured I just mention the Bitcoins. They're pumping here ahead of the open. But the major thing, guys, I think we want to focus on this week, really two things. So as far as the overall market goes, we got the short squeeze, and it was an epic short squeeze. I mean, like Apple. Apple's a good example of just how crazy this has been. So you got Apple with the sell signals, you got the bearish momentum, and then you get this 1, 2, 3, 4, 5, 6, 7, 8, 9-day ripper straight shot to the upside. So whether you're bullish or bearish on Apple, it's a little bit cooked here. Right? So I think Apple needs a good dip. I think a name like Tesla, a name like Amazon, you get this massive short squeeze off the bottom, and maybe that's the bottom. So maybe the bullish trend is back for the big tech stocks or the big semi stocks. But as far as, your S&Ps, your QQQs, your big FANG stocks, wait for them to pull back. So, we'll pick on Amazon here. Maybe that's the bottom forever in Amazon. But up here at plus 2 ATR, up here at the 200 SMA, after a 9-day ripper, we probably don't want to chase that. Ideally, I think you wait for a dip on Amazon. I think you wait for a dip on, say, Tesla. And maybe you buy that dip. But I think really important, guys, to let things cool down a bit here and kind of, let the Teslas, let the Amazons, really just the overall market, make it prove itself. So you got the QQQ here. Maybe that's the bottom. But I ain't going to come jumping in after a 8 to 9 day push with no pullback. So wait for these things to cool down just a little bit, right? If the Qs pull back from here, the same thing goes to the S&Ps. The same thing goes to the small caps. If they pull back from here, we want to be really patient because they're not pulling back into, a beautiful uptrend. The QQQ pulls back. It's not pulling back into bullish momentum. It's not pulling back into bullish structure. Make it prove itself. Wait for that dip. Then you anchor to a level of support. And if you actually find some support, maybe you're playing the next push higher. But in terms of buying a dip, and we talked about this, in last night's video, a dip this week in the QQQ, in my opinion at least, is, totally different than, say, a dip in the energy sector. If XLE comes into 66, maybe 75, 76, 75, look what it's pulling back into. It's pulling back into a beautiful trend. You got momentum. We get the green 10x bars on the weekly and the daily. So both your weekly chart and your daily chart, they're full of bullish momentum. You've got the weekly and those daily stacked EMAs. So there's bullish trend, there's bullish structure. And then the indicator that we're working on, my buy signals, you got a bunch of buy signals here. So there's a huge difference between, say, energy and, the QQQ. Energy versus XLK. There's no buy signals. In the short term, this is more of a downtrend. There's no weekly or daily bullish structure. And your weekly chart still has bearish momentum. If it pulls back, you can look for support. It might be worth a shot, but just understand the difference. The semiconductors, and like I said about Amazon, maybe that's the bottom. But here's my thinking. Right? I want all of these issues here on the chart. Right? There's no bullish momentum. There's no stacked EMAs. I'm going to sit back and let the semiconductors fix those problems. And once those issues are fixed, then I'm going to buy the dip. But if this pulls back maybe 2 to 3% this week, what are we pulling back into? The trade might work, but in terms of probabilities, I think, guys, until we get a better sense of, okay, is that the bottom for the market, and the next pullback finds support, and they just rip it back to the upside, or is this your good old-fashioned short squeeze, your bear market bounce, and everything rolls over again? I think you want to be a little bit patient trying to figure that out. And if you look at the SPX options chain, calm down there, old girl. The name of the game the last 2 to 3 weeks here has been, destroy the shorts. The market's been on a mission. So if you look at the quarterly expiration, and mind you, that's a big expiration, which is March 31st. So what's that, Thursday? So the name of the game has been crush the shorts. If you look at the 4,500 puts, there's some pretty big open interest. Even after the push, there's some pretty big open interest. The 4510 puts, for whatever reason, have got even more open interest. And you got a good amount here on those 4520s. So the point being is, if the market kind of wants to seal the deal here and finish the job, I think into Thursday, Friday, we're probably going to hang out around 2,500, right? Just to make sure that everybody holding these 4,500 puts, the 4510s, those 4520s, just to make sure they all feel that pain as those puts expire worthless. So be patient with the indexes. In the meantime, guys, some really good trends out here. My focus moving forward is making sure I don't miss these trends. And we've talked about energy, so we don't got to beat the dead horse here. The only issue is the entry. I'd like to jump into the next pullback here for the energy stocks. So a few of them, like EOG, picture perfect. So I think you're jumping into EOG every time you get a dip here to the 21. We got the buy signals, you got the weekly and the daily green lights. So that checks out. A little bit of Devon here. So there's trend, there's structure. If this pulls back next week, or this week rather, that's pulling back into a pretty good trend, right? So EOG, Devon, pretty much all of them, guys. Chevron, the Big Fang, and then there's natural gas, UNG. So look what this would be pulling back into. So when you get that 2 to 3 days of selling pressure, right, everything feels a little bit soft. You got to see that 40,000 foot view. Right? That dip, and more importantly, that dip. It's pulling back into some really good stuff. We got those buy signals. There's a bullish daily squeeze, and you got your green lights. So for my style of trading, right, totally different to buy the dip in UNG versus buying the dip in, say, Qualcomm. You're not buying the dip in Qualcomm into a very pretty chart. There's no structure to support the idea that you're buying a good dip. There's no momentum to support that idea. So the energy names, guys, the UNGs, all good-looking stuff here. And then you, and like I said, my focus is just can't be missing these kinds of trends. Some of these fertilizer stocks, not the sexiest names on the street, but I think a superior trend to your semi stocks, your tech stocks, all that good stuff. So there's Mosaic, there is NTR. You need a good flush. There's CLF. So there's a few good trends, guys. And then one more group I want to show you here. And I covered all this in the Sunday video. Compare healthcare to XLK. So healthcare versus big tech. Healthcare fixes a lot of those problems last week. We're back above the daily and the weekly moving averages. We've completely shifted momentum. It actually fires a daily squeeze to the upside. But look at your top left-hand corner. Right? If we're going to buy calls, if we're going to sell put credit spreads, if we're doing anything that banks on the price going higher, you want the weekly and the daily stack DMAs. We got bullish daily momentum. it's working on some weekly momentum. That's a pretty good dip to look at. So you got Johnson and Johnson, J&J, probably a good candidate here. Well, look how it fixes everything. There are sell signals, there's a negative histogram, there's no stacked DMAs, it's looking pretty rough. Everything gets fixed. Back above all the major moving averages, total shift of the histogram, and you got some green lights. So on top of energy and those fertilizer stocks, I like healthcare, Johnson and Johnson, and then CVS. Now this one, guys, depending where we open today, it's not up here at plus 2 ATR like the energy stocks or the fertilizer stocks. Little dip here in CVS. Great looking daily squeeze. I think you might want to take a little nibble. But the theme here, guys, is structure, right? Structure, momentum, buy signals, which we want all of those things if we're going to get long. We still don't have that in the S&P 500. So this pullback, I think it's a little bit suspect. I could easily see this market rolling right back over, right? Bear market bounce, trap the shorts down here, crush the shorts, trap the new bulls, and then you crush the bulls. I can easily see that because there's no stacked DMAs, there's no buy signals. That's the kind of structure you want to take day by day if you're looking to get positioned to the upside. Energy, on the other hand, I think you take every dip. So that's a watch list here, guys. In terms of like the bigger stocks, I think you look at a Tesla here and you say, hey, you know what? Well, for one, I'm probably not going to chase it up here. But Tesla does a pretty good job last week of fixing some issues. We got rid of the sell signals. Back above all the moving averages. Is it perfect? No. There's no stacked DMAs. We're working on the momentum, but that's a really big improvement. So while it's not picture perfect, Tesla pulls back here, I'm certainly interested. If Micron pulls back, I'm not interested at all. This doesn't fix any of those structural issues. We're not back above the moving averages. There's no stacked DMAs. We didn't fix any momentum issues. Negatively stacked DMAs, red 10x bars. That's going to be a dip into some pretty bearish structure. Tesla might be a dip to a pretty big improvement. Check out NVIDIA, right? So the point I'm trying to make is it's not like after the short squeeze, we're looking across the board and it's like, wow, everything's perfect again. Like all the issues have been fixed. Momentum everywhere is bullish. We're back into full buy the dip mode. I don't think just yet. I think we want to be super selective where we're buying the dip. If you look at NVIDIA, I mean, it's almost perfect. The two things keeping NVIDIA from being perfect are daily stacked DMAs, which you probably get this week, and a better entry. But look how quickly NVIDIA steps up to the plate and fixes that crap. We're not seeing that everywhere, though. So to some extent, AMD, a little bit better, but they're not gobbling up AMD like they're gobbling up NVIDIA. There's a name like Micron. Look at Micron. They're not buying the crap out of Micron. Qualcomm. So the point, guys, is be super selective, right? When it comes to, okay, I want to buy a dip this week, ask yourself that question. What am I buying a dip into? Is it something that looks like an EOG, an energy stock, where you're buying the dip into everything you could ask for? An uptrend, bullish momentum, and all that good stuff over there. So that's a watch list, guys. A few more setups here. We did a little bit of trading last week in Altria. Come on, Thinkorswim. Altria here. And we're going to keep buying the dip because you have trend, structure, and some momentum. So we like Altria. Altria, CVS. That's what we're holding going into this week. But that's what I got for you guys. Hopefully that makes sense because the FOMO can be really big right now. And factor in how much worse the FOMO can be. If you're getting short down here, then you're getting crushed in the short squeeze. Right? Now you're out for blood. You're out for vengeance. Now you're looking to buy every dip you can to try to fix those problems you had down here. Got to take a different approach. When you're putting your hard and cash to work, you want to have the best quality trend, the best buy signals. In terms of the S&P, we're not there just yet, in my opinion. In terms of the QQQ, it's tough for me to say, hey, let's buy every dip in the Qs when we're under the weekly 21. So be selective, guys, but I'll jump in the chat here if you got any questions, anything you want to take a look at. We shall do exactly that. Hey, good morning, Beverly. Good morning, Terry. Good morning, Sean. Good morning, Mimi. And I'll tell you what I can do for you guys is let me see if I can find the watch list, and I'll copy and paste it in here. That way you guys can have all the names. There we go. And for those of you in the mastery, we got this posted as well, but it's going to be updated today, so we shall share this. Let's see. I should be able to copy and paste. All right, guys, I'm going to put this in the chat for you. Whole bunch of nice setups there. And a lot of these are extended, so we are looking to buy some dips. All right, and then a few more for you. All right, guys. Hey, good morning, Robert. Let's take a look. Bank of America and Wells Fargo. Let's take a peek. Well, first, let's just look at energy. I can't get off of energy. Let's look at the financials, rather. To me, this is where you start to see some improvements. We're back above the moving averages. We're trying to shift momentum. Now, it's not perfect, but that's some really good progress. So in terms of Bank of America, back above the 21. Let's check out Wells Fargo. They're going through that rebuilding phase, which, if you have patience, isn't really all that bad of a spot to pick up a little bit. Now, of course, if XLF rolls over, then they're going to roll over as well. Now, why would the financials roll over? More likely than not, because the S&P 500 rolls over. So for any swing trade right now, guys, even if you're trading something that doesn't necessarily move with the market, in the back of your mind, we at least got to be mindful of the fact that the index here might just need to come in a little bit. And as that potentially comes in just a little bit, it might mean that the financials, for example, they come in a little bit as well. Now, Robert, I'm not sure how much time you have till expiration, but just in terms of structure here, the financials are starting to shape up nicely if they can continue to trade above that daily 21, which means they could dip from about 39.5 down to 38.5. They could dip about $1 or so, but I think if you hold that 21 EMA, they're starting to shape up. But you got to keep an eye on the big mama of the market, the S&Ps here. But the financials are rebuilding. They're rebuilding, looking pretty good. All right, guys, keep going through these here. Good morning, Manveer. I'm deciding on a target price. Great question. You got to go with 2 ATR, I think. And on a few trades in this market, I've paid the price, looking for more than 2 ATR. And as silly as it sounds, for whatever reason, I took those Keltner channels off my charts, and sure enough, getting a little greedy on a few trades. Like I had a short on Amazon, and it ended up being profitable, but did I take profits there? No. Look what I sat through. Did I take profits here? No. I'm taking profits, smaller profits, on the bounce back at the 21. So out of sight, out of mind. So now I got them back on my chart to make sure I behave. So I think a good target is 2 ATR. Could it go further? Of course, but in terms of probabilities, that's a nice move. That's a nice move. Awesome question. Okay, and a good follow-up question here. So what I used to do with my credit spreads, like I would be really focused on trying to get, call it 80% of max profit. So here's what would happen. I'd have my Keltner channels up. Say I sell a call credit spread on Amazon. It would flush into my target, but now say my credit spread's only at 50, 60% of max profit. What I would do is, okay, I'm going to hold on here just to try to get that extra 10, 15, 20% of the max profit. More often than not, it ends up turning into a break even or a losing trade. So my mindset now is, hey, at 2 ATR, whether I have 10 weeks left till expiration, whether I have 20% of max profit, 80% of max profit, I'm going to take the money and run. And then I'll look to deploy that cash into the next trade. Awesome question. So I paid the price a few times breaking those rules. Robert, good work. You got a good entry then. Plus 30. Nice work. Really good work. Hey, good morning, Gabe. Let's take a look at All America. Old Ford. All right, let's take a look at old Ford ski here. So plus to the upside, where I think you want to be careful is to the extent this continues to trade under that weekly 21. Because right now you kind of have the opposite criteria that it had back here, just in terms of like the overall trend and the path of least resistance. So back here, 21 EMA is pointing to the upside. We're trading above the 21, and of course you have stacked EMAs, or you did, and we have bullish momentum. Right? So when our weekly chart has that kind of structure, typically we're taking daily squeezes and we're trading them to the upside. Right? With that kind of weekly structure, path of least resistance just tends to be higher. Now, if we look at the weekly chart, it's kind of the opposite. 21 EMA starting to slowly but surely trying to slope lower. We lost our bullish structure. Now we have bearish momentum. You can see it on the histogram as well. So in terms of playing this to the upside, that's kind of the key level you want to see Ford break back above. Call it about 18 bucks. Back above 18, you're rebuilding that weekly structure, which just kind of gives you like that support, so to say, to put in a move to the upside. So I'd be a little bit careful here under 18, which granted, it's a couple bucks away. So like Tesla, like Nvidia, we'll be back here on Friday together. Ford can fix all these problems in 1 week, like we've seen with a lot of stuff. Just keep that in mind, though. The structure of the weekly chart back here, that made trading this to the upside so smooth, that's all kind of flipped. So keep that in mind on Ford. Hey, good morning, Gene. Yeah, so I think gold here, guys. Good reminder. I should have covered this one. Really, regardless of what time frame you look at, I think it looks rock solid. So we can actually start with a monthly chart. Monthly stacked EMAs, monthly squeeze, monthly 21 curling on up. So good monthly chart. We're only a few weeks in to the weekly squeeze firing long. And remember, weekly squeezes can trigger some pretty big trends. Doesn't mean it goes up vertically, but a weekly squeeze can trigger a good party. So great weekly squeeze. The 3-day chart looks good, but here's a great example of what I'm referring to in terms of What are we buying the dip into? We want to wait for those 2 to 3 to 4 day windows where everything feels and looks super bearish. It's down 1%, 2%, 3%, 4%. Take that 40,000 foot view. This pulls back into the daily 21, totally normal. A few days later, we're getting buy signals with the white arrows, and we got the green lights. Doesn't mean gold was right back to 195 immediately. And not to keep picking on Micron, but a pullback in gold is a pullback into a beautiful trend, right? A lot of structure. Until it can fix a lot of issues, a big pullback here in Micron, it's pulling it back into something very different. Now with gold, if you've traded gold before, it can be a little bit of a pain. So I think you want to go May, maybe June, July expiration. Just, treat gold as one of those trades where you're going to set it and forget it. It can be a little bit spastic, is a nice way to put it. But I think a great setup. Yeah, Robert, a great alternative would be debit spreads. And here's what I'm finding recently, right? Is I open up my plate of opportunity to names outside of Google, Amazon, Tesla. Something like a CVS, something like an Altria. They don't have as much premium as Amazon, for example. So though I love my credit spreads, what we did on Altria and CVS was, some debit spreads and some long calls. So yeah, it's a great alternative. And sometimes it makes more sense. You price out a credit spread, you pick your targets, and then you throw it into the Analyze tab. Sometimes a put credit spread's not going to offer the best risk reward. Might be the debit spread. Might be some, Delta 70 long calls. So you do want to be flexible. I think it's a great alternative. Mr. Rocky. Good morning, Mr. Rocky. Yeah, so, Home Depot and Lowe's. So they're going down together here. Pretty rough stuff. Not sure if there's any context behind it, but just in terms of structure, we've kind of spent all morning here, guys, talking about what do we want to buy the dip into? Well, the other question is, what do you want to short the bounce into? Now, buy the dip versus short the bounce, at least on my end for now, Home Depot looks a bit more short the bounce. Under the weekly 21, moving average is pointing lower. No bullish structure or trend, bearish momentum. And then I have my daily sell signals. So until these bounces can start to clear the moving averages and shift momentum, would I short it here? Absolutely not. Because that would be basically like loading up on calls back here. So I wouldn't short it here, but if I was looking for a directional trade, that's what I would lean towards pretty much until we're back above the weekly 21. But the short it down here at support, as we can see, that can get pretty painful pretty quick. Hey, Sean, the weekly 21 EMA. Yeah, so that's a little tool we got over at Simpler. Sean, if you happen to be in the options room over at Simpler, it's in the room drive, and I believe it's called Sam Shame's Moving Average Study, something along those lines. What you could do as well is go to your weekly chart and do a little something like that. Drop yourself a little line in the sand near your weekly 21. Yeah, and Gene, we took our initial entry in GLB last week. So we did a May monthly expiration put credit spread. However, we sold the 185 puts. So pretty much, into May, banking on gold trading well above 185. So those puts can expire worthless, but we're selling them here while they're in the money. Get a little bit of extra premium. But for gold, guys, I would go May or June expiration. Could do a put credit spread, a debit spread. You could buy some calls, but I think you want to give it plenty of time. Time is always important. Hey, Gabe. All right. How do I factor in geopolitical and macro news into my trading? Do I consider myself? Yeah, I would consider myself purely technical, right? All about structure, all about buy signals, sell signals. It's a good question because with a focus on just like structure over everything, it kind of keeps the biases out of it. Now, if we want to have a quick discussion here outside of trading, yeah, it's kind of ridiculous that the market is rallying here, given the context of everything going on. Inflation, everything that the Fed is planning to do, Russia versus Ukraine. I don't really see too many quote unquote positive catalysts here for a 9-day straight shot to the moon, nor would I quote unquote see any catalysts for this to turn into a bullish market again and trade higher. But if we start getting stacked EMAs, green 10x bars, bullish momentum, buy signals, the only thing I can do is play it to the upside with a focus on nothing but structure. To me, that's most important. Awesome question, though, Gabe. Awesome question. Hey, good morning, Dimitri. Quick look at, let's see. I got to jump in the options room here, guys, in 2 minutes. Okay, so I wouldn't short it here. You're at that psychological level of 50. That's been support. So I wouldn't short it down here. But at least take into consideration for now, it's certainly in the downtrend. So say you're looking to play the long, Dimitri, what you're going to want to look for, and you don't even need the Squeeze Pro. If you just get the OG Squeeze that's on most platforms, what you want to see is red to yellow to blue on all time frames, meaning the bearish momentum starts to dry up, and slowly but surely you get bullish momentum. If we look at the hourly chart, see how it's going through a few of those shifts? Right? It's not doing anything just yet, but you want that hourly chart to start to turn bullish. You want your 4-hour chart to start getting some light blue histogram bars. Look how long it's been. Since, call it September. So because you're in a downtrend, you're going to start on a 30-minute chart, a 1-hour chart, until you get to the point where that daily chart has that histogram going positive. Then I think you got a rip coming in here. Greg, so the stacked EMAs, I don't believe they're for sale on the Simpler site, but to my knowledge, they do come with my mastery. So in my mastery, I think we hook y'all up with that. But to my knowledge, Greg, I don't think it's on the store or anything like that. But hey, guys, awesome questions this morning. Always a good time hanging out. I will be back on Wednesday, and then Chandler is on vacation, I believe. So I'll be back on Friday. We're doing the 3-peat this week. But I got to go heat the coffee up real quick, guys, and jump in the options room. So I hope you all enjoy your day, trade safe, and we'll be back on Wednesday for more fun. Hope you all found it helpful, guys. I'll talk to you soon.